Glad to have you join us now. Let's turn attention to other conversations now. The rising inflation in Nigeria showed no sign of slowing for yet another month, as the National Bureau of Statistics on Tuesday announced that the average cost of goods and services increased by 21.09% in October. In the previous month, September 2022, the inflation rate was 20.77%, and when compared with October 2021, it rose by 5.09%. It was 15.99% in the same period last year. The Statistics Office said the percentage change in the average consumer price index for the 12th month ending October 22 worsened as a result of a disruption in the supply of food products, an increase in the cost of importation due to the persistent currency depreciation, and a general rise in the cost of production, like increase in energy cost. Well, to get talking now, let's look at this now in details and the impact of these on the livelihood and of course the value of the naira. Mr. Mukhtar Mohammed is the CEO of Finance with Motaro. He joins us virtually now. Thank you for finding time to join us again. We appreciate you.
Thank you, Frank.
Yeah. So talk to us about the reason why the inflation figure went up according to NBS. It is because of the cost in energy costs, surging food prices, and of course importation, cost of importation as well. What's your position on this?
Exactly. When you look at it, those are three things that we don't have control over. We don't have control over importation costs because we need to import to feed our people. About 80 to 90% of what we normally use is being imported into the country, especially day-to-day or basic necessity. So definitely, I'm not surprised. Rising energy costs, you and I know why that is, because globally that has been the trend. We're even a little bit better now because of we've not removed subsidy on petroleum product. Government is still subsidizing. Ordinarily, that could have been higher than what we are seeing, because presently government is subsidizing petroleum products by over 300 to 400 naira according to the government. So soil food price, of course, insecurity, but it has improved. But now we are grappling with flood, and I'm sure this is even better comparable to the one we will receive later on. Could be worse, especially in the terms of food prices. So these are things we have no control over, and that's what we keep saying, that we should do what we ought to do, because economics, sometimes you don't have control over economics. It just plays base. It's just like garbage in, garbage out. What you put in the computer is what you get out. So sometimes in economy, what you put in economy, you get the results in data like this.
Now, point taken. I mean, it's quite scary when you say it could get worse. I need you to perhaps talk to us more on that. When you say it can get worse, how worse can it get?
It can get worse because, Frank, flooding in most of the food basket of the nation, you see flooding all over those places, and so definitely we will not have a lot of goods coming towards the urban settlement, because even the rural people will be struggling to feed themselves because of the flood. And the flood badly affected every part of Nigeria, and some parts are highly hit than the other part of Nigeria. So when you look at that and you look at some of the products that will be coming from those parts that are highly hit by flood, then you know that we have a big challenge on our hands. If you look at Benue State, which happens to be the food basket of the nation, they may not be so hit by the flood in Benue State. But again, insecurity in Benue State is on the rise because of the bandits and the henchmen. They are still creating a lot of havoc in that state. So definitely when you look at that, you look at security challenges are still there, even if they are not like they used to be. And also you couple with the fact that a lot of farmers will not be, their crops were lost in terms of the flood. Even Lokoja, Kogi State also experienced it, Edo State, Bayelsa State, River State. Virtually every state in Nigeria was affected. So you expect that to tell in terms of our productivity.
Now, I know the NBS gave reasons why we're having this surge in inflation rate as a result of any dimension, energy cost, importation costs as well. But it's important for us to trace the history of the rise in inflation figure with regards to, government's approach with in terms of policy, right policy, monetary policy, and fiscal policy as well. So, what can you say about this?
Well, monetary has been existent. Physical have not been, it has been non-existent. Monetary have carried all the burden. They have even intervened in key sectors that they are not supposed to do. So definitely monetary policy have been doing all, because we are not seeing the effect of what the monetary policy have been, because the physical side have not been able to come up with a better idea on how to handle the economy. It's not in the place of the monetary committee to begin to create jobs. It's in the place of the physical side that need to bring out policy that will bring more jobs into the monetary side, just to control. Remember, they have two specific duties: control inflation, and then make sure there is currency stability. And in the two of these, they have been trying so much to do that, even if they are not achieving it. But because most of the what they are doing, we are not seeing the lights in all of this, because the physical side need to complement the monetary side. But in terms of that way, is non-existent. Rather, we see the physical side fighting within themselves, trying to say this is what should be done, this is what not should be done. I think sometimes the government tend to run the country like if some of the ministers are opposition party than being to the ruling party. So it's a big challenge, and that's why I said it could get worse or true.
Now, talking about the monetary side of things, talk to us about the CBN stance when it comes to interest rate. I believe you've been following up. They've raised interest rates for like 3 consecutive times since the beginning of this year. MPC meeting is ahead of us next week again. But talk to us about why you think the CBN's intervention or by raising interest rate to tame inflation is not working.
Yeah, it's not going to work, because rate hike is successful when productivity, or when most of those products you are getting it in from your country. Because what you think you are gaining in rate hike in Nigeria, you lose it in terms of volatility of the exchange rate. So that's why I keep saying that what the CBN need to concentrate on is to bring stability in that exchange rate market, where, especially not through the import windows, but a lot of people, day-to-day people that produce day-to-day product for Nigerians do not go to the import-export window. They want to patronize the bureau de change, the parallel market. And that is because of the kind of quick attention, a quick result that we get from there, comparable to go to the bank, fill up the form, wait for whether it's your term on that. So they need to work on the interest rate, because what we are seeing, the hiking interest rate is not going to reduce cost of production. Hiking interest rate is not going to bring stability in the exchange rate. Hiking interest rate is not going to make sure the macroeconomic instability that we encounter in terms of the supply chain will be met overnight. So interest rate hike is good, but it's only good when the economy is mostly being taken care of inwardly. But now, if you want to control interest rate in your own country, what is happening is that you make your own goods and services more expensive than the one they even bring abroad. That's why some.
Yes. The CBN has also defended why they have to raise interest rate. They said they are not doing that, or they didn't do that in isolation, because other central banks across the world are also doing that. In Egypt, South Africa, and in Kenya, they are doing that. And of course, we also saw that in the US, where the Federal Reserve raised interest rate as well. And also there have been a conversation that we should expect more rate hike in the US as well. Do you think this is justifiable?
Frank, is not justifiable, because those countries that are doing that, they have other physical policy that the people are enjoying. There are physical things. When you talk about the UK is going to be paying energy for almost all the houses in the UK to the tune of £2,500. When you talk about the US is taking care of their basic needs of families, giving each family that have up to 3 children about $300 and something, $105 every month. So you can't compare that. because they are looking at it. It's not just the physical side will always have to complement the monetary side. And what in that complementary if you raise high, you don't want the burden to be on the people, then you begin to take care of some of the basic needs. And the basic necessity that any economy strive on that cause havoc if it's not being met is food. So if we have rising cost of food, we are not seeing government releasing greens, we are not seeing government saying, okay, farmers, we are going to give you this thing, we are not seeing government saying also civil servant, we are going to be paying you anything, then definitely the physical side is non-existent.
Now let's talk about the Nigerians already battling with weak household incomes, spending it's weak as well, and of course cost amongst other things. Talk to us about these. The food inflation has gone up as high as 23.72% in the month of October. This is the height it has gone in 17 years. At this point, is there something the government can do to cushion the effect of inflation, especially with regards to reducing food inflation?
Nothing. The only thing they can do is to release the strategic reserve and see how they can give cost of funding to farmers, let it be cheaper. Because what we see that the cost of funding is not cheap at all for farmers. So definitely they will continue to experience this challenge, because once cost of funding is high, when you go to bank, you want to collect loan, the loans interest rate that you're going to pay is going to be high because based on the hike in interest rate. So definitely that is the challenge. How the government will need to help them. Government will need to intervene directly. But unfortunately in this our country, because we don't have data, once government want to intervene, it gives room for politicians to come in there and say they are into this and they are into this, and they collect some of these funds. So I think CBN need to see how they can directly intervene in those key sectors of the Nigerian economy.
Interesting. Yeah. So the MPC meeting is ahead of us next week. What are your expectations and outlook for that meeting?
Same, Frank.
Can you hear me?
Yes, I said same, Frank. I don't expect anything new. I might see them saying, oh, we just hiked the rate. We have not seen the result. Hopefully we'll begin to see the result, blah, blah, blah. So I'm not expecting anything different. Sincerely speaking, I don't think I'm expecting anything different.
Because again, apart from the fact that they raise interest rates to tame inflation, one of the reasons they gave is to also attract investors into Nigeria. So again, is it time to start looking away from just ordinary attracting investors now to looking at how to also perhaps boost the macroeconomic activities at the grassroots level?
If you improve the macroeconomic activities on the grassroots level, then you bring if the investors come, then the first people to benefit from the investor will be your people. But if you don't do that, when the investor come, they come to take ownership of your economy, and by the time they are leaving, then your economy will be back to where it used to be. So we need to use a two ways approach. Begin to develop our people to take advantage of the economy, and while we are attracting other people to come into the economy. That's just the way it will work. Ordinarily, if you leave it to them, because the foreign investors will come in and they will see this asset at a cheap price. Remember that their own cost of funding is cheaper than our own cost of funding. But unfortunately, I think we are, even with CBN policy, they've not been able to attract any foreign direct investor or any foreign portfolio investor as it stands now.
I'm talking about attracting funds again. It's let's perhaps digress a little bit in terms of borrowing. What can you say, or what's your outlook when it comes to borrowing? Because we understand that the U.S., other communities are going to be raising the cost of borrowing, and then, of course, to make things stringent for Nigeria.
Every economy has to deal with its own situation. So, cost of borrowing, I think once you hike inflation, cost of borrowing go high. So, if you lower inflation in cost of borrowing, then you might create another social system which will bring in more inflation. So, the CBN is between the devil and the deep sea, and I think with that they would definitely want to maintain inflation at what it is today.
I think it's a good place to leave it. Thank you so much, Mr. Mukhtar Mohammed, CEO.
Thank you so much, Frank.
Thank you so much. We appreciate your time.
Yes, sir.
I've been talking to Mukhtar Mohammed, who is the CEO of Finance with Mukhtar, talking to us on inflation report for October. Well, scary. Things may get worse, he said. Well, we'll take a break now. When we return, of course, it'll be time to look at some other perspective. Of course, the IMF is also calling on government to look at how to tame inflation as regards policies or macroeconomic policies around rising inflation as well. But that's our focus next. We'll be back in a moment. This is Business Breakfast. Please stay with us.